Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Everybody, welcome into the podcast. It's Phil's Tax Hacks and Other Retirement Facts. And Phil, I'm 62. I'm not 62, but I'm turning 62. You know, it's not a milestone that most of us want to celebrate. Do we turn it on? Yep. Do we not? Let's talk about what it might do to you from a money standpoint, just to kind of go ahead and get that, satisfaction of getting the government back or whatever your reasoning is, putting that money in your pocket. So let's dive into that conversation this week. How are you, my friend?
Doing good.
Yeah.
Doing good. How about you?
Good. Do you get this question like every day?
Yeah. I mean, it's a common question. There's people all the time calling and, we even have clients that we've done the planning for that,
right.
The numbers, the math says this is the right age and it works in their plan, and that we'll have the kind of the revisitation of that discussion because, hey, I've talked to my neighbor and, they're not waiting, they're going to go ahead and file. Are you sure this is still the right number? And I was like, oh yeah, let's run the numbers again. We can, kind of walk you through that.
Okay.
But at the end of the day, it's a numbers game, right? You have to understand the math behind it and make the informed decision that way. So,
well, why do people file at 62? You just gave one because I keep hearing my neighbor say he's going to do it.
Yep.
I joked and said, I want to get the government, right? It's like sometimes we're like, I'm just going to stick it to them. It's like, what's my money anyway?
Well, I hear that often. It's like, hey, I want to get it as soon as I can, right? I paid into it all these years. Let's just get the money.
Right.
I don't know if it's going to be there that long, The challenge with all those is they're not factually based, emotionally based, really, is what it comes down to. And why did your neighbor file at 62? You don't know their scenario. Maybe they don't have any other resources. Maybe they had to, So you got to look at your scenario specifically. And filing just because you want to get it now before they run out, well, that's not a factual decision and reason to file. You've got to look at, could it adjust? Look at the facts and have that discussion with an advisor to know the facts behind, hey, this is the reality of Social Security and filing at different ages. So,
all right. So let's talk about, okay, you're thinking about it. Maybe you're on the fence, full retirement age. Let's just go with 67 to make it easy, right? That's for most people at this point. Why wait? Right? What are some advantages to waiting till FRA?
Sure. Well, so filing at 62, you're going to take 25 to 30% haircut, depending on your full retirement age, from full retirement. So retirement age is when you get 100% of the benefit you're entitled to.
And that could be thousands.
It can be thousands of dollars, right?
Or actually tens of thousands of dollars.
Right. So it's a significant number. We're approaching that era where most people now, their full retirement age is almost at 67. We're almost beyond the age where it's something lower than that. So most people are like 66 in 10 months or something now. So, so that being said, the easiest thing to think of is so it's 67 versus 62, so that's 5 years, so that's a 30% reduction. So on average, it's around 6% a year that you're losing to file early. The way to think of that, because I hear, well, I'm just going to file early and get the money while I can, and I'm going to invest it then,
Right.
Well, okay. So let's work the math through on that, because by waiting and not filing, it's quote unquote guaranteed return of about 6%.
Right.
No risk, right?
Are you getting that? Yeah.
Are you going to get that, from an investment? And
maybe
that's not, well, maybe, but in the same risk category. Think of like a government bond is effectively what this is. Are you going to get that in a government bond, which would be the same risk category? Answer is probably not. And that's not the full reality either, because you're not going to, at the end of the day, receive your full Social Security benefit because the IRS wants their tax on it. So you might only end up getting 70%, 80% of the benefit net to invest. So there's a lot
going early,
right?
Yeah.
So again, the things to consider with going early. So why would you wait? That's one of the reasons there is just waiting to get. And it's not even getting an extra benefit. It's not taking the reduction.
And if you are in a position where not turning it on to 70, right? Going 3 more years, it goes up, what, 8%, right?
It goes up another 8% a year. Right.
Yeah. So,
so those
and
are
that
all
could be
factors
that,
that play into it. So,
and that could be that spousal strategy, because that's the other piece of this, right? So if you
correct.
turn this on at 62 for whatever reason you're going to go with, other than the math, you could be jipping your spouse out of something whenever, you bite the farm, or vice versa.
Well, yeah. So from a survivor benefit, yes, because I mean, if you're the higher earning spouse and you filed early at 62, yeah, you've not only you've basically locked in the highest of the benefits out of you and your spouse at the lowest number it'll ever be. So, I mean, that can be devastating potentially to a surviving spouse, because now it's a dramatically reduced benefit. So there's a lot of factors that play into it. One of the other things to consider if you're filing before full retirement is if you're going to continue to work. Because if you are, well, then you're not going to be able to earn a high level of earnings. You might end up giving the money back anyways.
Which is fine if the plan or the math, everything calls that you do need to take it, and you do want to do a little something part-time because you want to stay active. Cool. Like, all that stuff makes sense. But if you're filing at 62 and you don't even need the income, you just are doing it because, hey, I'm allowed to, I want it, whatever, I'm going to reinvest it, whatever. That just seems crazy to me.
Even if you're able to file, so full retirement age, you can continue to work and earn whatever you want and file. So I have some clients that they still are of the mindset, well, I'm going to get it, at that age, I'm going to continue to work. And it's like, okay, but you really don't need it. So we're back to that whole discussion of, well, you take it, you're going to lose a big piece of it to taxes, because if you're continuing to work, 85% of the Social Security benefit probably is going to be taxed, and it's going to be taxed at your highest marginal rate. So you're going to lose a substantial portion to taxes. And you now have that net benefit that you can save, but again, not doing anything and letting it grow at 8% is on the full amount. So I mean, there's all the math behind it. A lot of times just does not make sense to take it before you really need it.
Well, a lot of times people, in thinking about, most people being married, and they say, okay, well, one makes more than the other. So maybe, and this is a strategy that a lot of people do, and this maybe is a way to kind of, I don't know, find a happy medium, is the person with the lower income does turn it on, especially if you're the same age, turns it on at 62. The one that's making more delays there so that it can get that growth. And at least now you're talking about some sort of a strategy versus just, hey, we're just turning it on.
Yeah, and that's the key to Social Security planning is having a strategy. For a married couple, it's vital to do this because of that effect of survivor benefits and spousal benefits. So understanding the interactions of the two.
What is there like 6,000 claiming options or something?
Yeah,
crazy?
I mean, if you look at every single age differences, because you can file it at monthly increments, right? It doesn't have to be 62 or 63. I mean, it can be 62 in 1 month. It can. Yeah. I mean, so that's how they come up with the 6,000 option.
Okay.
And I mean, if you think of it, the further apart the ages are on between spouses, I mean, it just starts to complicate things too.
Yeah, there's 5 years between my wife and I, so that'll be interesting.
Yes, I mean, it makes a totally different plan than people that are the same spouses that are the same age. But yeah, it's a matter of running the numbers and looking at it holistically beyond just you, looking at, if you're married, you and the spouse, from a household standpoint, to how do we get the most benefits. Very often we've had clients that it does make sense for maybe the lower earning spouse to file at least at full retirement age, because a lot of times it doesn't make sense for them to wait, because they're not going to end up getting more because of the spousal benefit at some point in the future. Sometimes it makes sense for them to file at 62, and again, running the math in their scenario, if the lower earning spouse filing at 62 makes the plan work such that the higher earning spouse can wait till 70, that might be a good trade-off, because now we've built this survivor benefit at a higher benefit. We've maximized it, so it ends up working from a long-term standpoint.
Are people getting more sophisticated with asking these questions when they come in, to things like that, saying, hey, we want to be as efficient as possible with Social Security? Are you seeing that more, or are we just still getting a lot of the, well, I'm 62, let's turn it on, kind of thing? Yeah,
I mean, we do see more where it's kind of the extremes. A lot of times I'll have clients come in and say, well, we're going to file at age 70. And that's great. So that's your plan, but let's make sure it works.
Okay.
Let's make sure it's really the right number. Because when we're running through the math on Social Security, and we just did this yesterday with a prospective client, that their plan was to file at full retirement age, and he's retiring right around that anyway. So I mean, it works out well for them. But we ran the math to say, does it matter? Does it make sense to wait till age 70? So for them, mathematically, in the long run, if they, live to age 90, one of the spouses, and typically 85 for the men, 90 for females is kind of the average life expectancies we would run. Yes, it would make sense in the long run for them to have waited. But this is the key. Yeah, it was a bigger number, but it was only bigger by $55,000. For them, the break even, meaning that the year that they finally caught up from filing at full retirement versus waiting till age 70 was age 85.
Okay.
So it was a long time they had to wait.
Yeah.
And the other component that we look at is, well, how much did you put at risk? So if we were to look at the cumulative benefits they received at full retirement, if they had filed at full retirement, versus what they would have gained by the spouse would have filed at her full retirement. So what they would have gained at by the higher earning spouse waiting till 70, there was like $180,000 differential there. So bottom line for them was this: look, you put $180,000 at risk, meaning if you died early, that money's gone. You spent your money to get a higher benefit. It took you all the way to age 85 to break even, and at the end, if you lived to 90, you get another $55,000. That just doesn't make sense in the plan. So just running the numbers, truly, yes, they would have had more in the long run had they waited till 70. Looking at the numbers and kind of the different components, it didn't make sense for them to do that because the risk was higher than the reward at the end.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of the Tax Smart Retiree right now.
Well, that's a great way to wrap it up. So, should you turn it on at 62? Just go find out, right? Go run the numbers and see what you need to do for every individual person out there and have that conversation for yourself with a qualified professional. Phil is a CPA and a personal financial specialist. So if you need some help, reach out to him. We've got links in the show descriptions below to get yourself some time onto the calendar. And of course, as always, make sure you're checking that, scenario for you before you take any action on something you hear on any show, not just ours. And again, if you need Phil's help, there are links in the description below. With that, we'll see you next time here on Phil's Tax Hacks and Other Retirement Facts. Hit that subscribe button on Apple, Spotify, and YouTube, and we will see you later. Thank you, Phil.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.